Good morning, good morning. It is 7:45 a.m. Tuesday, November 15th, here for my pre-market analysis and trade ideas video. So as you can see, we've been playing this optimistic sentiment from last Thursday, where we had an improvement in the inflation report, and the markets are taking this as a very optimistic signal that the inflation may be coming down, meaning that the Fed may slow down their rate hike path. Now, this has a huge bullish, optimistic implication for the stock market, as the rate hike cycle has been the primary reason that we've been in this this extended bear market since early 2022. Now, having said that, we're still playing this optimistic sentiment as bullish structure is still holding on the stock markets here. On US 500, looking at US 100 as well, printing new highs. The FTSE UK is still in bullish structure. The DAX is bullish as well. Australia is bullish. Hang Seng is bullish. So we are optimistic on basically all of our major global stock market indices. And looking at the VIX as well, we're holding below bearish structure after creating this new lower low. We've been flirting with that 24 level, but respecting it consecutively and showing some low short selling in the market, meaning a lot more optimism as a confluence here. Now, the US dollar has been bearish. Let's just wait for this chart to load. All right, so now we can see very clearly that we've been in this strong bearish market on the US dollar after rejecting multiple times to break above this 114, 113 level up here. We've had this sell-off with the optimism, and just overnight we've had a new break of structure, breaking below this key 106.5 level that we were looking at, which is a higher time frame bullish level that we're breaking. We initially had a reaction there, grabbed some more sell orders before breaking back below, creating new lower lows here. So we've got fresh lows on the US dollar. We're breaking past this this consolidation range that we were looking at yesterday and that we were failing to break. Now we had that breakout to the downside, and now I'm more confident in taking aggressive trades here, playing this optimistic sentiment. So that's going to translate on gold with a bullish bias here. So I've summarized my key points here, right? So my bias is bullish based on the optimism, based on the structure, and based on all these things. The fundamentals, we had the PPI and manufacturing data at 8:30. So looking at the calendar real quick, for the New York session, we have a few economic data points here to look out for, especially in the US if we're playing gold. The core PPI expected no change, and the regular PPI expecting no change as well. So the PPI itself is just, it's been priced in to not have any impact here. And we know that PPI is an inflation measure, but it is not as important as the CPI, which is the consumer inflation metric. This is a producer inflation metric, which sometimes is a precursor to CPI, as if there's a lot of inflation for the producers, then those costs are going to get translated to the end consumer eventually. However, the headline PPI number is not as impactful. We may get some short-term volatility if we get a much higher or much lower reading here for the PPIs, right? So we're going to have the same sort of impact where a lower inflation reading is going to be taken as optimistic, and a high inflation reading is going to be taken as pessimistic, as if inflation is still high, the Fed's going to have to raise rates. If the Fed has to raise more rates, the economy is going to suffer, the stock markets are going to go bearish, and gold will go bearish, as well as all risk assets will go down. Now, similar to the New York Empire State Manufacturing Index here, expecting a slight improvement from the previous, still in the negative, still showing some recession characteristics, as we are in the expecting a negative number, but that's been priced in. So we're basically going to be looking at mostly, is it an upside surprise or is it a downside surprise, right? So this data we're going to be looking at, and I've summarized what this means. Strong data will be bearish for gold, bullish for the dollar, the DXY, as a strong economy means higher rate hikes by Fed. Very simple. Weak data is bullish gold, and bearish DXY as the weak economy, slower Fed rate hikes. Now, just to summarize what we've already talked about, the DXY printed fresh lows in the London session respecting bearish structure. VIX is holding below key structure. Equities holding bullish. So the optimistic sentiment holding across all markets here. Now, for gold specifically, we're bullish on the daily, 4-hour, and 1-hour here. So if I just hide my drawings here and then go to the daily time frame, we see we've been playing this bullish structure, and we've been continuously pumping to the upside, and we've had this bearish structure that we've been respecting. Now we have multiple failures to break as buyers step in at these lows. Now we have a strong break of structure here as we break above these previous highs around the 1680, which also happens to be previous lows as well. And we broke above this level at around the 1730s as well. So we're breaking past multiple levels of bearish structure here, and most recently this 1760 region as well, that we've had now impulsive bullish price action, closure above this key level. Yesterday we came and retested that level around 1760. We've rejected. Now we're printing these new higher highs, and we're on our way to the next zone, which is these previous highs right here around 1800. So we're well on our way to come back up to the upside given this optimistic sentiment in the market. So we're bullish on the daily time frame. On the 4-hour time frame, it's very easy to see that we've had these consecutive higher highs, and not even deep pullbacks or anything, just higher high, consolidation, tight consolidation, impulsive higher high, tight consolidation, gathering more orders, new higher high, brief pullback, new higher high. Now we're starting to get a little bit of a pullback here, but still maintaining structure, new higher highs, and just consecutive bullish price action here. Very, very strong, very, very convincing, as the optimistic sentiment is being priced in, especially for gold here with this very, very strong price action here. So we're going to be looking to take part in gold buys today if we can get some price action confirmations. And now these are the trade ideas for this session that I've identified, basically 3 areas in the market. Now, if price comes down to the 1767 area, this is a strong level here, because we printed these new highs and created support, previous structure as well, created a double bottom, buyers stepping in at this price level and printing new higher highs. Now so if we come back down to this level, start showing some slowdown on the lower time frames, we definitely can get that breakout. Now this level, as well as 1773, 1774, are key levels of structure on the 1-hour and on the 4-hour, as we're breaking above these key levels and now coming down and starting to grab some liquidity and potentially creating a support to go back to the upside. So that's trade idea number 1, is the deeper pullback retest of 1767. Number 2, 1773, that we're already retesting, but if we come grab some more liquidity for the New York session, we can definitely have that move play out. Or if we just break above these previous highs, we can have a strong momentum breakout set up above 1778, 1777 area, to fill that range and potentially retest these highs here. So we're going to be looking for buys on gold as everything's lining up. The market conditions are looking pretty nice, pretty optimistic, lots of volume and volatility, clear one-sided sentiment, market structure confirmations are there. Now, these are the days that we are looking to take advantage of the market when everything is pointed in one direction and we are trending here. So going to be looking to take advantage of an opportunity here on gold today.